Hello guys, glad to have you on board again. Today, upon user's request, we're going to restore the candlesticks on the charts, as it may have been disappointing quite so many of you. So I'm here to do this for you, not for me. So even though I thought it would be helpful to just delete those candles to avoid reading biases, apparently you guys like that, so I'm just putting them back in. What do we have new today? The Ethereum chart just plotted the stop pattern. So the bears are starting to put themselves in place. They're trying to fight for that resistance. Absolutely no signal to trade. So I would say it's a risk management signal for the bulls, not an interest signal for the bear. At least bears can be really aggressively selling this, but I wouldn't necessarily recommend that. As we do have a bullish momentum that has been breaking through the previous highs. So we've got more strength than we did back then. So bullish prices, bullish momentum, no reason to fail below that resistance. So kind of a far better odds than we break through this, just a matter of time. So don't be overexcited, don't just try to buy right now. Normally you should have bought the speculative area and just let it go right now. So all I can tell is that low risk profile, tiny profit taken in here if you feel like you want to do it. But I still suggest you keep on most of these open positions to wait for this breakup to occur, eventually take a breakout trade on top of that for those who want to, and just wait for the price to reach out to the targets. I think the speculative work in here is just terminated. So it's just about reinforcement for those who want to. I personally won't. I'm very well exposed. So it's just a single trade, speculative trades going from point A area to point B area with an associated stop loss, and I just let it go. I'm not going to reinforce in here. I don't want to put more risk in the crypto sector. So bullish bias, bullish technicals, and everything suggests it's just going to work fine for now. Absolutely no necessity. It doesn't say it's going to happen, but it's all I can tell is that in a technical and statistical perspective, this is definitely something I wanted to be into. By the way, also we're going to talk about something else I just wanted to clear with you guys right here, right now. I might have done something I shouldn't in the past few days and weeks, talking a lot more about the psychological scenarios like the SPX, the BUNDs, what else do we have? The AUDNZD. We're not necessarily trading technical. I mean, those markets give some technical signals, but they fuck it up right after. And it means the technicals are not working just fine, and generally a sign that the market is trading psychological patterns. And I generally tend to make that comparison that the trading job is actually kind of a mix between a poker player and a chess player. And definitely the technical part of trading comes down to chess playing, building a strategy, using odds and statistical advantage to beat your opponent and basically take advantage of your opponent's weaknesses. This is exactly what we're doing in here. I'm not forecasting what the price will be. All I can tell is that when I give you signals to trade, at least you're facing your opponent's losses, or not losses, weaknesses. You're buying when the bears are really weak, and you're selling when the bulls are really weak, which is the least you could do if you want to take advantage of a good position in the market, at least in an interesting price area to speculate. That's just what we're doing, and it's really comparable to playing chess. You're just going to put your pieces in place, respecting your strategy, not taking too much risk. Then you're going to wait for your opponents to make a mistake or to open its game so you can try bite by bite to get into its failures and trying to get the advantage bite by bite. That's how you win a chess game. But it's not just also about that, because poker player is kind of a side personality of this, because as I said, you're going to have to take care of technicals in the market, but there are also psychological patterns. those you will learn them getting through this. I'm not talking about the trader psychology here. Okay, trader psychology is the topic we're going to dig a lot deeper into, which means what are the emotions you feel when you're trading, how to fight the negative emotions, and everything like that. This is trader psychology. What I'm talking about here is market psychology. It's like the trader psychology, put it into macro perspective, which basically means that the market is acting irrational to induce some very dangerous psychological reactions, and it's basically going to force you to take bad decisions, so some others who will have taken better decisions will profit from you. This is nasty because in those structures generally experience tend to be the filter, which means experienced traders tend to take the money from the unexperimented one. So the problem I came through, the conclusion I got down to is that I'm talking to you about those psychological patterns a lot recently for a simple reason. I care about that for multiple reasons, because when I see those psychological patterns, I know I'm going to make a shit ton of money, because this is definitely the price context in which I make the biggest gains. But the difference is I'm experienced and most of you guys are not. So it's kind of a nasty selfish reaction I've been doing, talking a lot about those things, because I really care about them, because generally when they happen, I know I'm going to make a big gain. So it really catches on my interests, and when I do those podcasts, I tend to tell you what I care about, and that's a problem, because in here I think I'm not helping you with this, because as I said, you're far less experienced than me. Therefore, the fact that I'm talking to you a lot about the psychological pattern recently may somehow induce the fact that this is what you need to master. But you shouldn't. You should stick to technicals for now. At least make sure you know how to play chess before you want to play poker face. And it's definitely, if you're getting yourself ahead of trading, you're going to need the two faces. You're going to need to be a poker player and a chess player. But you really need to start with the chesses. It's a lot easier. Okay, so chess first, and then you learn how to get to poker face. But yes, I'm sorry for that. I'm not going to do that mistake again. So I'll stop talking about, or at least I will cover those psychological patterns, but I'll do it a lot quicker because I don't want you to be thinking that this is where you need to be, because no, where you need to be is where the technicals work just fine and when you can chess play safely and make nice gains. So we're going to talk about those assets today, because there are some assets we're trading perfectly like technicals, and obviously there are the others who don't, like the BUNDs, who just keep on going straight line to the upside. It's stupid. I don't know why. I know it's going to end well. I know it's not going to end well. Same thing goes for SPX, but it's a psychological battle. The market is trying to induce some nasty psychology, and therefore you know about that. So I'm not going to talk a lot about this, but more today about what assets do trade like technicals and in chess perspective and do it pretty well. And we do have the yen index. It's very interesting today, as well as the dollar. So the dollar index is giving some very nice bearish signals, as you can see, triangle, overbought cluster, right into context and bearish trend channel. So this is definitely, I think, kind of a wave 2 pullback, and it absolutely fits the scenario. 1, 2, 3, 4, 5 waves to the downside, 1, 2 waves to the upside. Even though we've been taking more time to consolidate, we haven't broken the previous highs. We're trying to reverse. I'm sorry to say that, but there is definitely a trade to make out there. This was definitely something to trade, putting a stop loss at the market top. I told you I would do it. I've done that. Now we get the price reaction. So I think the price is reacting accordingly. So to me, the trade is upon validation sooner or later. It's just not now, but I'll validate a little bit lower. So if we manage to go to the lower area of the trend channel, I'll consider this as a validation, and therefore I'll be able to, my stop loss is still there, okay? So for now, I took the trade in here, and I'm going to put the stop loss in here whenever we'll reach out validation, which means I will have available cash to reinforce. All right, so I'm reinforcing dollar right now, looking at reinforcing the dollar sooner or later, just waiting for further validation to do so, but I still tend to believe that now. Remember just a few days ago, okay, so you gotta go straight forward. A few days ago, everybody was thinking the euro dollar would break down its support area, that we're gonna go to 1.11, and now we've got the opposite signal. So it's definitely the kind of shakeout in psychology that generally precedes a trend. So I think that the trend is about to come for the dollar. We've been ranging for far too long, and to be honest, the fact that we're now rejecting the bearish trend channel seems like this is typically the wave 2 in which everybody was going to be wrong-footed, because the bulls think they're going to win. They're buying in here below resistance, they got fucked up, they will trigger their stop losses in here, and this will probably trigger the trend. The trend will go straight forward to support area in here, support context, and we'll see if the bulls are buying again in here. If they're not, I mean, if they take a stop loss in here and they don't even buy in here, we're going to trend even further than that. I don't know where the trend will lead us. All I can tell is that I want to be bearish in the dollar right now. It was the technicals that suggested this. We're still early trending, so don't be too aggressive. It's not about time to be leveraged in here. It's just be maximum speculative leverage in here is absolutely necessary, because we're still having, we're starting to have the first and early validation of those scenarios after waiting for that freaking long. I mean, remember how long we've been waiting in there. Now we have possibly validation signals down the road. It's time to move on to the next step. The market follows the technicals, so play that game. It's a daily scenario, so remember that you don't want to have a look at each and every daily clinical close, but most likely when the prices reach out interesting areas. So in here it's just whether we go there, back into context. It's probably going to be in validation to May, or we reach out to the trend channel in here, confirmation, reinforcements, or the target area. Yen index is definitely interesting as well. Guess what? Daily chart, trend channel, signal, oversold in a bullish trend on the trend channel. What the hell do you think is going to happen? We're definitely going to buy this area. So I was watching closely for this. I was expecting us to eventually go lower. I'm not. So I'm reinforcing all the yen pairs just right now. And to be honest, I just talked about the dollar right before. So what do you think I've been taking this morning? So euro dollar yen is I've just reinforced this asset. All right, so dollar yen is definitely a reinforcement to me. As you can see, trading really well. Fibonacci retracement level, volume area, overbought cluster, right into trend channel. So definitely something I'd like to trade. We'll see. This thing can still go a little bit higher, so don't be too aggressive, but still in here, maximum leverage. I think the stop loss must remain there to be safely. So it's not the time to be fully leveraged and very aggressive. It's just a time to put some bullets, shot some bullets, and see if you can take down some heads, and waiting for the market to validate. Whenever we'll have the validation, I'll be able to narrow the leverage, to narrow the stop loss, and therefore getting a bit more aggressive. For now, it's just tasting temperature as usual, so don't be too aggressive. If you go to be too aggressive, then you're going to have some problems. All right? I don't nearly think that this thing is going to be bullish. I just think this is really a fucking warning, and the market should have taken consideration of it, because, I mean, everybody thinks the stock market is bullish. Just look at the USD yen. I mean, if the goal is that we're going to have a bullish yen and a bearish dollar, oh, fuck hell, this is what's going to happen. I mean, you see that? All right? It's definitely something, no? Don't you think? So I think in here we've got something really interesting. So, okay, big, nice triangle. Okay, so we'll see, because first of all, I don't nearly think that we're going to reach out to the top of that triangle. So to me, it isn't a triangle. It's just a nice long-term trend line that we're working through, and that we're probably just going to reverse out of. So you still know what I'm thinking about this thing. I think the worst is to come, and okay, I think to me this is the bearish signal. This is the first impulse. This is the consolidation, A, B, C, D, E, and then down. Everybody thinks that this is bullish impulse, triangle to go up, that's an option, but I don't nearly think it is. I could be wrong. If that's the case, then stop loss, and I'll accept being proven wrong, but I don't nearly think that's the case. I think that in here, sorry about that. Okay, this isn't this this is really look like a trend. Okay, so far I still tend to believe I'm going to be right. Future will tell, but in here I definitely want to trade. Okay. So, patiently waiting for this thing to trigger. Be aware that the stop loss must be set here, not to say even further than that, because we can still try to grind our way up. Why am I taking USD yen? Simply because I have bearish signal on the dollar, bullish signal on the yen, and I don't think we're even going to trading this area. I think we're just going to reject the mid part of that triangle, go straight back to the support and break it down. So, that's my sentiment. I don't know it is. As I said, I'm not putting a high level of risk in here because I still have a very decent amount of uncertainty, but I have some concerning signals that I need to trade. So if this is a big triangle, we're definitely going to try trading the top of that triangle again. Therefore, stop loss must be take that risk in consideration. But anytime we're going to reach out to 50% or lower trend channel is where I will be far more leverage than that, okay? And this thing can really target some very long-term support areas. More likely we're going to target fibs of this previous impulse. Let me just wait for them to plot. They don't. Maybe monthly. Yes. So the Fibonacci targets in here will be important. And I think in here is where we can target monthly support, Fibonacci targets. So it's a 87 on dollar yen. So if we go there, believe me, you definitely want to be among them. So if we go there, it's a 20% drop on USD GPY. We'll see about that, but it's definitely fitting the plan in which we have a stock market just driving itself crazy and strongly and brutally reversing. So patiently waiting for something to happen, but I think putting a little bit more bullets in that market is interesting. And ZD yen is definitely as well. I mean, oh God. Let's go daily and you'll see a lot clearer. So we're trading the bearish context in the daily charts. We had the signals in here, so this is where I've been trading. We're trading a little bit higher, but we knew that there was a Fibonacci in here, so we got straight up to the fib. And we're now trading this area. We've got low volume in here, so breakout area, and I think overlap. I mean, look at that level on an historical basis. Strong resistance, support, 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 resistance. It's definitely a huge overlap for NZD yen, and I strongly think that we can just fail in here. We can. I'm not saying we will. All I can tell is that this little excessive price out of my speculative area doesn't really bother me. I'll just think that let it go, okay? It's decided to reactivate strongly, mostly because of NZD in here, but I think we're just going to digest it for a bit, trying to rise in here eventually, but I think it's a matter of time, but to me the odds sharply remains to the downside in here. So the goal today, as I said, is slowly reinforcing dollar as we have early signs of validation, getting a little bit more money into GPY as we're reaching the expected speculative area with signals. So definitely needs a trade in here. Electronic arts, I'll definitely try to take a tiny trade in here with a stop loss at the low volume area. So candle close upon 110, I'm out. It's not a daily signal, sorry. We need to trade in context, remember that. That's absolutely necessary. So 8 hours could do the job. But what the fuck is happening? Time zones, so no more the extended trade. Alright, so no extended hours. That's odd. What the fuck do we have? It should. What the hell is going on? Why do we have different things on the daily and oh yeah, okay, the context I know the same. So I would say 8 hours can kind of relates to, even though it's the same as daily. That's weird, but we're gonna take that. So 8 hours signal. We've got the red triangle. We've got no signals. So I think it's something that could be traded, but it's going to be harsh. So maybe I'll just wait. Actually, 8 hour doesn't give me a thing. So I would say I would just wait for us to break down the previous context. So I would say in here is where the interesting area will be. With an invalidation in here, for example, is going to be more than enough. All right, so I'll just wait. Apparently, I think it's more rational in here. Boeing, I'm going to take this one. I'm sorry, I messed with it. I told you I want to trade in 1 hour chart signal. I was clear about that. But the thing is that I put this alert first. So I wanted the market to first trigger my alert, and then I would have taken the trade. What the hell? Oh shit, yeah, because I just deleted okay. Alright, no problem with that, but anyway, signal, overbought cluster, red triangle, I've got everything we needed to trade. It's just that if you take the extended hours trading, you had a beautiful exit signal. Alright, but I shouldn't even trade that, so yes. Alright, no extended hours. Definitely a signal to trade in here in the expected price area. I think we need to be bearish on Boeing. Speculative bearish. Sine wave is definitely in the expected cyclical selling area. So yes, definitely a green light in here to be selling Boeing. So I'll take this one today, obviously. That's going to be it. So as usual, be a lot patient. AUDNZD is still dying out here, waiting to find some reasons to rise, and I think the reason to rise is gonna come from NZD. I think NZD yen can just fall like a knife. Just remember this: NZD yen, AUD USD, and NZD USD. All right. So if you have a look at the daily chart, okay, if NZD USD is about to reverse in here and play the bearish context versus dollar, which means the NZD is gonna fall sharper than will the dollar. So if the dollar is bearish and if the NZD is even more bearish, how the hell do you think AUDNZD is going to perform? So to me, it's all the pieces of the puzzles kind of hesitating between two very dangerous, between two radically different directions. I'm speculating on one direction. If I'm wrong, definitely I'm going to pile up losses. AUDNZD is going to be wrong-footed. The stock indices will be wrong-footed to me as well. If I'm wrong, definitely I'm going to lose all my gains for the early tradings of that year. If it goes right, if AUDNZD goes up, if stock indices goes down, especially the US, if the dollar goes down, if EURDollar goes up, if GBP/USD goes up, I mean, if all my swing scenarios are about to trigger, oh shit. I'm going to make a lot, because in here everything is basically playing accordingly. So we're going to have to talk about this first of all. I just forgot about this, so I really need to take about that. Let's find a context. Yes, 4 hour context, exit signal. But I'd suggest we wait for a bit. Okay, this exit signal doesn't seem to be enough to me. I would like the market to overcome the context. As we're trading Fibonacci as a support. It's exactly the previous Fibonacci that has been traded that is now potentially trying to be acting as a support. So I'll just wait for another excessive market in here. Even though those signals could be traded, they are exactly the same previous price. So I'm not doubling down on that previous position. I still have this. Remember, I sold in here, I partially profit taken here. I still have half that position on the market. I'm just waiting. So if it falls again, I still have profits to make. If it goes higher, I'm eventually aware and ready for some reinforcement. But I'll wait for better prices. I'm not going to double down on the same price entry. All right. So I'm waiting in here. Once again, it's a psychological pattern in here. So don't overthink things. Don't trade just the technicals, but assess the fact that this market will just try to be as irrational as it could be before proving you right. It's just going to prove you wrong before proving you right. It's how dedicated you will be to your strategy, how risk management you will be good at, and it's definitely what's going to make the difference in those patterns. All right, bye guys. See you later.